A few months ago, Sydney professional Rogan McCurley decided to look for a house in Sydney's desirable northern beaches in one of the most expensive housing markets in the world.
As long as you recognise the insanity of it all and realise this is the current reality that we live in, and I can either accept the reality and be a part of it to a point, or I can not accept it and go live in the woods.
The reality is that house prices here in Sydney have shot up by 80% over the last 5 years, driven in part by a demand that well exceeds the supply. That's pushed the median house price to more than $1 million and created an environment
at 2.4 million quickly,
where house auctions often end well above the asking price.
I was fortunate enough not to miss out on many auctions. I was fortunate enough to find the place that I wanted and get the place that I wanted. Certainly that is not the case for most people. Many of my friends, several auctions they appeared at, and several auctions they went home in tears.
Australia's housing market growth, led by Sydney and Melbourne, reflects a shift in the nation's economy.
We had this enormous mining boom that was going on a few years ago, and the Reserve Bank kept very tight policy settings during that mining boom. It held back the housing sector.
When the country's mining boom ended, the Reserve Bank of Australia lowered interest rates, now down to 1.5%. That allowed prospective homeowners and investors easier access into the housing market and propelled prices, especially in Sydney and Melbourne.
Look, I mean, when we look at the market in the last 2 to 3 years, I'm selling properties in some cases within 24 to 48 hours, whereas before it was taking, anywhere from say 6 to 8 weeks.
But that rapid price rise has also pushed a growing number of first-time home buyers out of the market and created some anxiety.
A lot of people are very nervous about how high prices here have run. That's not a bad thing. It maybe curbs some of the enthusiasm, and the efforts by the regulators to hose down investor activity is also being felt. So we have had a flattening of growth.
The Reserve Bank has tightened lending regulations recently and is widely believed to be considering raising interest rates. A recent report warned that doing so too soon could cause the country's housing market to crash. HSBC chief economist Paul Bloxham and others believe the Reserve Bank will wait until next year to raise interest rates, minimizing any serious risk.
We don't think that house prices will decline, or at least not decline a lot. We do think house price growth will slow down in coming years.
And a number of analysts say the growing demand and lack of adequate supply in certain cities such as Sydney should continue to prevent any major market corrections.
What's your value on raising a family in a home? What's your value on having a deck that looks over the ocean? That's impossible to put a price tag on.
And Rogan McCurley says he knows from experience that he's not alone. Greg Navarro, CGTN, Sydney.